All right, guys. So I'm going to go over in this video the trade that I took to pass the MyForexFunds phase 2 in essentially one trade. Now, just for transparency purposes, I was risking about 2% on the trade. So that was that. Some people may consider it high risk. However, it was an A+ setup for me. It was on an hourly time frame, as you guys will see. So I did have a little bit more confidence in the trade, knowing that, hey, it's not like a 5-minute entry where you might get wicked out. Stop loss was a bit wider, but I will break that down all right after this. So let's go ahead, and here's the dashboard. So pretty much, and this is the thing, right? Whenever funding companies, guys, like if we're running a promotion with Skilled Funded Trader and stuff, it's best to take the opportunity to get those discounted prices, because that's exactly what I did with MyForexFunds. They were running a July 4th promo. They don't usually run promos, so I took advantage of this. I also bought another account, and I'll break down how I got 600K in funding this week. That's going to be a separate presentation coming up. Again, I just want to kind of show people and give people the opportunity and tell them, hey, listen, the best time to purchase some of these challenges, if you are planning on purchasing one, is during discounts. Use these different discount codes with SFT. There's even a bunch of other funding companies that offer discounts as well throughout the weeks. So take advantage, get a discounted price. But yeah, before I go ahead and I'll get into it, just let me show you guys the dashboard. So you guys can kind of see here. The account starting balance. The balance right now is at 315, so the profit target is met. I just kind of have to hit those minimum trading days. So if you go through the trade days, and you guys are going to see the EU trade right here that kind of did the damage. Now, trading days, obviously, they have a requirement of 5, so I'm still waiting. So I got to just take another 2 days, and then I'll pretty much be funded. And yeah, I actually have another 300K. This is the phase 1. The other 300K that still haven't traded yet. Just because I don't like to take too many challenges at one time, or take too many trades of the same challenge at the same time, simply because then, you're just putting on too much risk. And the reality is you're eventually going to fail a challenge at some point. But now that I kind of finished this one, I'll probably start the other one maybe whenever I see a good trade. And for me, higher time frame is key. So let's go ahead and I'll break down the trade, and I'll break down the concepts as well before I even get into the trade. Now, before we do, I want to just kind of go ahead and tell people, first of all, obviously the rebrand. We are Skilled Funded Traders, as you guys can kind of see here. So Skilled Funded Traders, that is the new name. The website has changed as well, so don't kind of be worried about that. As well, we are running a promotion, 15% off, 85% profit split, and 115% refund until the end of July, in honor of our new broker, Think Markets. So now we offer Think Markets and ACAP at Skilled Funded Trader. Now, again, if someone's interested in kind of checking out the spreads and the executions, you can log into these credentials here and for ACAP, as well as the credentials for Think Markets. These are essentially going to allow people to see the spreads and stuff like that, which is, pretty dope. So that way people can kind of make that informed decision. And we do offer 2 regulated options. All right. So now that that's out of the way, let's go ahead and let's get into the charts. All right. So I'm going to go ahead, and before I bring up the actual trade, I want to go over this concept very briefly. I've talked about it multiple times. And if you guys want a full presentation, let me know. I'll go ahead and create it for you guys. No problem. But this is like a very basic concept, but so many people don't understand. This is the easiest way to identify a daily bias. Now, obviously, this is the anatomy of a candle, right? Let's just assume this is going to be a daily candle. So we have the opening price, we have the high price, we have the low price, and we have the closing price. Oops, I messed that one up. The close should be here. The low is right there. So if we know around the opening price has a move up, which is typically maybe a manipulation move. And we know that the candle is going to be bearish on the day. Essentially, that opening price and that move up is something that we can go ahead and take advantage on, and understand, like, hey, if we look for sells above the opening price, that is going to be a big edge, especially if we're seeing price run up into a lower time frame resistance. So, and you guys are going to see exactly what I mean. So open, and this is going to be 12 a.m. Eastern time, is with SMC concepts what we would consider that midnight opening price. That's going to be the quote unquote true open. Now, Let's couple this with another concept, which is understanding swing points, so swing highs and swing lows. I'm going to use a swing high here because the example I'm going to use on Euro USD is actually a bearish one. So when a swing high forms, you have this type of formation. You have a candle to the left, you have a candle which is in the middle, which makes a higher high, and then you have the candle to the right, which makes a lower low. You get this formation to form a swing high. This is very critical because if you can anticipate this daily candle forming, understanding, hey, a potential swing high is going to form in this level, now we can go ahead and anticipate for that day, price may be bearish. So if we understand that price is going to be bearish, right, or has a probability, because obviously nothing is certain in the marketplace, we can use this concept here where we look for sells above the opening price, or like, hey, if we already see this manipulation move occur, maybe in the New York session, just look for a retracement or some sort of liquidity pool rate, something of that nature to kind of get us in sync on a bearish bias. Now, not only, and this will be a different video, but not only can you anticipate this candle, but you could potentially anticipate that fourth candle, right? Because then this candle should not break this like swing high formation unless you have like some really big news event where sometimes they'll wick it up, take out this prior day high and then drop it. But assuming market conditions are normal and there's no really crazy news like a CPI or an FOMC, typically you can even anticipate that next candle as well. So this is very, very important. And if you guys want me to make a video very specific to this type of setup, let me know in the comment section. Now, as you guys know, I always start on the daily time frame. Now, if you guys were in the public Telegram, I already kind of talked about, anticipating the EU a little bit lower, simply just because if we go down to the daily time frame and we kind of zoom out in here, let me actually go up to the weekly so we can kind of see. We were already at this volume imbalance. So volume imbalance is essentially, you see this whole kind of area in here where there was no bodies, right? It was essentially acts as a gap, right? Again, this is like some ICT concepts. This area is an area of quote unquote resistance or a premium level where we can anticipate at the very least some sort of pullback, especially after such a big expansion move above a high. It's not crazy to anticipate some sort of reversal at this area. Doesn't mean that the market is going to completely reverse. It just means that we can expect a move at this level, especially because it's a higher time frame. Now, when we go down to the daily time frame, this is exactly what I saw on this specific day. We had multiple steps higher. We had this wick, and then let me remove this fib. That's for something else. We had this push higher. Price ultimately had that wick, and then we closed like this. So I was anticipating that swing high to form on this specific day in here. And that's essentially the trade that was taken on my Forex funds. Now, let me go ahead and I'm actually going to go and so this was the framework on the higher time frame. You guys know me. I need a higher time frame framework. And now let's go ahead and go to the hourly time frame. So on the hourly time frame, this is that specific day in here. So this current daily candle, let me go back to it. This daily candle, right? This is obviously closed and price is kind of done. This was on this specific day in here. So when we go ahead and we kind of, and let me see if I could put the day text indicator so that way people can kind of see which day this was. This was on a Wednesday. Perfect. Now, what's interesting about this, right? Remember what I talked about having that true open, midnight opening price? I typically like to see a move above it. And during the New York session, essentially, I'm trying to enter on an imbalance. That's my favorite entry criteria, specifically on the hourly. So we clearly had this imbalance point in here. And if we go down to the M15, we will see that the true opening price was already ran through. So this was a true open right here. Let me make this a little bit darker so people can see. And if you guys are interested in this indicator, I've talked about it multiple times on this channel. But obviously, like if anyone's new, I'm going to show you guys which indicator this is. This is going to be the, let me see if I have it saved. It should be this one right here. So you guys are going to see the ICT kill zones plus pivots TFO right here. This is the indicator, and you can do a lot of cool stuff with this. So if you guys are interested, check it out. But we have the true opening price here. So price ran above it in London, price ran above it in London one more time. And then inside of like London going to New York, we had that final drop lower. Now, this is the thing. Some people will be like, hey, but isn't this a quote unquote market structure break? And isn't this going to be kind of like an OTE? Remember, understand how the daily candle is forming. If this is the true open, and we're ultimately going to have that 3-bar candle formation, right? And I'm not going to draw the wicks just to save some time. If we're going to have that formation, I'm not looking to buy. We already kind of created a quote unquote high of that wick. So if that's the case and the price moves above the true open, and again, you have to use this concept with a clear bias on the daily. It's not like every day you just go like, oh yeah, I'm gonna have any bias and I'm just gonna randomly sell above the open. Or you need to have a clear daily framework, because if you're anticipating a bearish candle close, this is the signature in price that's going to be available to you. Now, once price kind of ran above, we had this big drop lower, New York open. That's kind of like my specific session. Again, price ran above the open and we had this imbalance. This was my entry. It was very, very simple. It wasn't rocket science. I entered right around here. I just put a stop loss right above here, and I was just targeting essentially this low. And I put the wrong, okay, this is the short position right here. So again, just very, very simple, guys. Some people will have the stop loss like right here, just because if it's like a swing point, theoretically should not break that, the 3-bar formation. I just put it a little bit more conservative, honestly, and then I just look to take profit essentially near that low. And again, when you look at the daily time frame, right, there's so much imbalances, and there was another one right here that we could look for a little bit of a move down lower. So on the daily, we've had room to the downside. So again, that's another key thing for me as well. Is there room on a higher time frame to move in my direction? And if that's the case, I'm going to go ahead and I'm going to look to take those trades every single time. All right, beautiful entry right there. I'm going to remove this. And again, risking about 2%. Okay, I'm going to remove that real quick because it's a little bothering me. But again, very, very simple trade as price hits. That's over. It was over. Obviously, it went more than 2R, but just to so I pretty much has got about 2.5% on the trade. As price made a new low, because I was again risking 2%, and the profit target was 5%. So yeah, pretty much took profit as price made a new low. So both a 2R trade. Again, guys, very, very simple. When you have a clear daily bias or a weekly bias, it becomes so much easier to trade because the entries are kind of show itself. It's very similar signatures in price, and it's not the most difficult thing in the world. But I hope you guys enjoyed this video. I'm going to make a separate video on how I got $600,000 in total allocation this week. I'm going to have a more presentation style like I had in the past. Let me know what you guys want in the comment section. And until next time, I'll see you guys in the next video.